All right, welcome to Table Talk. My guest today is the Magician. Welcome to the show, and how are you doing today, my friend?
Hey man, what's going on? Thanks for having me. I'm doing pretty good.
Yeah. So the first question is, what do you think is going on in this market right now? What is your take on the current state of the market?
Good question. I think right now everyone is focused on the jobs data. We get this data that comes out every month, every other month. Some data is more frequent than others, and I think everyone is just trying to front run that data. Um, Not every day is an optimal trade day. Um, that's something I had to learn. Starting out, I thought that everything was just I was just being very reactive, jumping on every bit of news, not really letting things flesh out. You learn as you go that you acquire some patience and letting certain things flesh themselves out because one thing in particular that I had to learn when I attempted trading and step into that um, was that I would lose money on even good days, like quote unquote good trade days. You would start out, you would make your whatever your target is, and then sometimes you find one wrong trade could just blow your entire day, your entire winning
Yeah.
streak. One wrong trade, and then you're sitting there just confused, like whoa, like how did that happen? And it happens pretty quick, you know. Um, so right now, I've been taking a lot more patient approach with the market. I try to look at the data ahead of me, just take all emotion out of it.
That's
Um,
right.
it's more raw that way. So if there's data that I'm anticipating, or I know that the Fed is going to be looking at, then I try to see the market from a different perspective. I try to step out of the retail mindset sometimes. That kind of gives me a clearer perspective because, in my opinion, we've all been indoctrinated with the retail mindset from birth.
Yeah.
So, especially with learning how to trade and just learning analysis in general, uh, it teaches you to separate emotions from your decision making and just strictly deal with the information given. And I think that's the hardest thing for most people to do. So, right now, especially in the market, like I said, jobs data come out Friday. That's unemployment, the number of quits, stuff like that. In my opinion, because inflation seems to have gotten out of the control of the Fed per se, I believe that they want to see demand destruction, quote unquote, to get to their 2% target of inflation. But I don't see that happening anytime soon per se in the near future.
Right.
So with that being said, I it is in my belief that the Fed will do exactly what they've been saying they're gonna do, which is uh, everything they can, which we know the only tool they have. Well, I wouldn't say the only tool, but increasing rates. That's just what they're gonna do, and they're gonna ring that point home every time. And there's a lot of reactionary things going on with the market. It almost seems like certain data seems like uh, like it wouldn't be something that should shock people, but it does every time. You know. Um, but yeah, I think the Fed's gonna keep increasing rates. They're not gonna pivot anytime soon, I should say. Um, Quantitative tightening is gonna take effect starting next month, I believe, with like $95 billion. And I read on Market Watch that They only achieved 22 billion uh, last month. Quantitative tightening, for anybody who doesn't understand, I guess I would describe it as the Fed trying to lighten their balance sheet. Uh, so they'll basically just suck money out of the market, um, for lack of a better description. So you can probably tell the effect that sucking billions and billions of dollars out of the market, the effect that would have on equities and things of that nature. Um, yeah, I think things are gonna get worse before they get any better. But I think there's an interesting dynamic going on with retail and and the direction the Fed has been taking to curb inflation. Um, from what I'm seeing, it's almost like, if you watch any media, maybe like Bloomberg, for example, uh, you'll hear this sentiment that you know the Fed is trying to warn everybody of inflation, that things are getting bad, and but people are still risk on for some reason. You know, um, when they otherwise shouldn't be or wouldn't be smart to per se. Um, so that kind of baffles some people as to why there's a looming threat of recession or worse, the S word, and people are still choosing to be risk on. Um, I think there's a lot of different reasons and factors that come into play with America and our open market and the psyche of uh, our retail market here. But you know, I think that there are a lot of theories that are new, just like how the crypto market as a whole is relatively new, per se, I guess, compared to legacy. And there are a lot of theories, some that have come and gone that have been proven, some that have yet to be proven true, some that have yet to be proven true, but definitely haven't been proven untrue. Like, for example, the 4-year cycle theory. There are a lot of theories that are floating around that people are, anticipating or attached to already, and I feel like that's affecting their trading patterns or behaviors, that we haven't seen before. Um, there's just a lot of things that haven't happened before that are happening now.
Right.
Uh, like Bitcoin, for example, being in its quote unquote first recession. Um, there are a lot of things that uh, me personally, I don't think could have been accounted for, and so there's that, and then there's a I feel like there's a latency in the data that's being shared between the Fed, the media, and then the people. To each level, I feel like there's a certain latency, there's a certain barrier to entry as far as getting the most up to date and recent data on our government and our economy. So I feel like to think that you can outsmart 100% or beat the market, I should say, 100% of the time with any one technique or any one strategy is just foolish. It doesn't work like that, and I feel like people would do more good than harm to themselves once they figure that out. Once they take a step back and start uh, gaining a better understanding of what's moving the things that they're following so closely and why. I think the average retail investor would do well to do that, especially in this time in a bear market, because the bear market is the best time to learn.
Yeah.
Um, so these are just some things like you ask me, the state of the market. I'm just throwing things at you that I
Yeah.
just think.
Yeah. I
But yeah,
think
I'm in a ramble, bro.
no, no, you're fine. That was a lot of good info. I'm sure people will really get some value out of that. I did. Um,
For
yeah,
sure,
I
for
think
sure.
the interest rate thing and quantitative tightening is going to totally wreck the market. Um, and they're kind
Hmm.
of stuck between a rock and a hard place right now. They can't let inflation run rampant because then that'll be the death of the U.S. dollar. And yeah, and
Right.
everybody's calling this, the bottom, because of everything that's happened before. So they're going off of hash ribbons and moving averages and stuff like that. And I mean,
Yeah.
I could make the case for it being the bottom, but nobody's taken into, you know, into mind all the macroeconomic shit that's going on, you know,
Right.
and
Right.
it just kind of baffles me that nobody's paying attention to this. Everybody just thinks Bitcoin is like shielded from, what's going on in the world, and it's never been tested like this before. So it's like we're
Well, the
really,
funny thing is, the funny thing about the Bitcoin chart is, you can almost get any you can paint almost any picture you want,
hmm yeah,
depending on who's looking at the chart.
exactly.
You can get any conclusion you want. So you can nitpick,
You're
cherry
gonna
pick, I guess they call it,
you're
data.
gonna see what you want to see.
That's why it's a. I think I've heard you say this a few times actually. Where people are getting their information matters, and
Yeah.
a lot of people don't even realize where who they're following or who they're getting their information from. That they don't they think that the people they're watching on, let's say YouTube, for example, are these like analysts or these people that know more than them, and that they just, you know what I mean, they just have this like magic setting or indicator on the computer that's just telling them
Right.
things. And a lot of these guys, the truth is they don't know any more than you. That's just the truth about it. you know
Yeah.
and the people coming into the market, I feel like there's a barrier for everything. And with futures markets, especially with the introduction of leverage, I feel like the barrier to entry has gotten lower for the common person to average a um higher access to capital than they would normally have. And I think also that has an effect on the volatility of the market as well.
hmm
You
Yeah, that's
know,
why
I feel like
crypto.
everything's playing to each other.
Yeah. Yep.
Hmm.
Yeah, that's why crypto is so much more volatile than the stock market. You can't go, 50x with equities. You know what I mean? Um,
Right, right.
right. Yeah, and one of the things, like I've said before, is you should really focus on education and teaching yourself or learning from others instead of just following what they're saying. You know what I mean? Because in the long run, it's
Oh,
not
for
going to
sure.
help you. It's going to make you lazy, first of all. And second of all, half them people don't know shit. You know what I mean? So it's just better to focus on education at first. Don't think you're just going to hop in this market and get rich. You need to focus on education first, and that's why, like, I have those classes and stuff like that because I want to teach people the right way to do it. I want to teach people to be able to stand on their own feet and,
Right.
and then learn from experience. But you have to start with a base. You have to have a stable base foundation that you
It's
can be
foundation.
right.
Agree. 100%.
Yep.
100%.
That you can begin with.
And
Um,
honestly, I don't think people realize how important that is. Actually, like there needs to be an emphasis on the education part, because
yeah.
there's so many pitfalls to this thing, that we're all like so enamored with. called the market, called futures, called margin, called equities in general. And I feel like it's the instant gratification. I had no idea how big of a role the psychological was
Yeah, that's
until
three
I really
quarters of
started
trading.
getting serious. Right, right, and I think I've heard you say before. Would you say it's like the market is like idle? What 70% of the time? It's volatile. What 30%?
Yeah, yep,
Something
basically.
to that effect. And it's so crazy because if you really sit back and if you were just to just watch a particular asset, well, we'll say Bitcoin, it really is there really is some truth to that. Like, the market's not always going parabolic and it's never going parabolic in one direction, like just straight. It's never straight up, it's
Right.
never straight
A
down.
lot of
This
times it's
market,
stair steps, you know?
there's some and there was some people who go as far as to say, this thing was never all in. You know what I mean? It's never
Right.
all in one way or the other.
Yeah, there's
So
ebbs and flows.
there's ebbs and flows, man. You
Yeah.
gotta, and I feel like the main thing too that I would say, if I could tell somebody or if I could tell myself, go back in time and just leave a note for myself, would be that there's no perfect strategy, but you can use analysis to get the best odds for whatever you're trying to accomplish in your favor. Because this is what this thing is all about. You know,
Yeah,
you can't control the
probabilities.
market. Probabilities. It's all about probabilities. It's like how probable are these things to happen, and why, and what could affect this short term, long term. You're employing a lot of different uh, disciplines, I would say, at once when you're doing technical analysis, for sure.
Yeah.
Um, and yeah, man, it's not as hard as people want to make it. I think that's kind of objective, but it's something that just always fascinated me, and I just always loved, just what makes the world move, like,
Yeah, I'm
and
fascinated with it.
man, I love it because
Yeah.
I almost got into, I almost was going to be uh an import export broker, um and so kind of just I think I just have this innate thing for logistics and just connecting the dots and correlations, and so I think I have this predisposition to just connections and correlations, and I just get all of that in equities. Like I just love everything about it.
Yeah. Sometimes the simplest strategies are the best. You know what I mean? Like
Right,
you don't need to
right.
have seven indicators on your chart. Like I trade with moving averages and three indicators. The only things I go off of is trend, volatility, and momentum. And that's it. You know what I mean?
Right,
Like, and
right.
that's really all you need. Now, there's other indicators that combine the two and have like, set days and stuff like that, and
True, true.
different support and resistance levels. Actually, I use four because, well, and moving averages, because I use the VPVR, which is horizontal volume at a certain price mark. You know what I mean? Uh,
Right, right.
it's funny that you said, what advice you would give to your former self. That's actually one of my questions. So probably ask you for a little more of that in the future,
Oh
you
yeah, for
know.
sure,
Um, so
for sure.
what made you want to start trading in the first place? Like where did it all start? How long have you been trading? All that.
Um, well, trading at first I started more so just investing. I think like most people.
Yeah.
Um, doing some research, picking an asset, buying, getting into a position. I did that. I want to say from maybe 2018, maybe 2017. Uh, just like everybody else, just but I was in stocks.
Yep.
That's how I started. Um,
Me too.
I was in it with the best of them. I literally was following every trend, doing no analysis, just shooting in the dark. You know what I
Yeah.
mean? Kind of
Yeah.
just like everybody else, shooting in the dark. Because if you're not doing any analysis, that's what you're doing. It's pretty much you just even the investors, like the people who just put their money down on something and just kind of trying to just build a position and all right, I'm gonna hold this for X amount of years or whatever the case may be. I'm gonna hold on to this and I'm just gonna add on to it for my check and I'm gonna take this much for my check and I'm just gonna add it, add. That's investing. I was into that, but I wasn't doing any analysis. The extent of my analysis was a Google search,
Yeah.
if that. I wasn't cognizant of the CPI data that comes out or uh, all of this and that. Like no, I was just shooting crabs in a barrel in the dark. Uh, and tried my lucks, and after maybe like 24 months of that, uh that's when I kind of got into crypto around 2019 ish. um I want to say, I wish I could remember what month specifically in 2019 because that was a very important year. But got in crypto specifically around 2019. Still not really too much of an analysis person, but I was better. I was better. I had lost some money, made some money. In that first like 2 3 years, and I felt like I was a little bit better, but I knew I wasn't where I should have been. I wasn't where I should have been. And I would say a big thing that kind of got me to that next level was the will and the want to learn.
Yeah.
The will and the want to learn. That was my basis for doing anything in life. You know, I was not born rich in any stretch of the imagination,
Right.
but I saw my first decent bag, I would say, uh, with Ethereum, because that was. I remember watching Ethereum before it was 300 bucks, a couple hundred bucks. I remember when you used to go on certain websites and it was just BTC, Ethereum, Litecoin, what XRP maybe,
Yep.
and Ethereum was just another coin to me.
Mhm.
It was just another coin to a lot of people. It was just Bitcoin. Everybody just knew Bitcoin, and you know, but uh, Ethereum was my first crypto investment. And oh, actually, you know what? I lied. I'll take that back. I'll take that back. I was definitely buying Bitcoin before 2019, but let's just say back then people were buying a lot of pizza with it.
Yeah.
A lot of people I knew they were still buying a lot of pizza with it. I'll say that. So Bitcoin actually was my first investment, but I didn't see the value in it. Or I wouldn't say I didn't see the value in it because I bought it, but I didn't see the future.
I
I
get it.
couldn't see Bitcoin's future. You know what I
Right.
mean? There's no way you could have told me Jack Dorsey would be running around hollering about Bitcoin back then. There's no way you
Nobody
could have
knew.
told me that. Yeah, that Elon was gonna be, you know, the guy, parading Bitcoin and Dogecoin around and trying to buy Tesla. Like there's just
Right.
there's just no way. You know what I mean? And
Yeah.
it's funny too because at one point I remember being a kid and just reading up on Bitcoin and this digital currency, and I knew about the blockchain before I even knew how to buy Bitcoin. And honestly, I tell people all the time, I'm like, yo, if I would have just took that curiosity a little bit further back then, who knows what this story could have been like. But everything happens for a reason. So once I got into crypto around 2019, it was a wrap. It was just a wrap for me. I was hooked. I was just fully hooked. The volatility, the storyline to all this shit, like I was hooked. I was like, yo, this is it. Like this is it. This is the future. Like I get it. Web3, I was hooked. Couldn't tell me anything. And then we had that big boom of 2020. That's when everybody, I think, eyes kind of lit up,
Opened.
like opened, opened, completely illuminated. Like
Yeah.
when everybody watched Ethereum do what it did, I think that kind of like changed the view of altcoins in general. Like, hey, there is Ethereum, but hey, now I think there's other stuff that we can make money on. Like people started getting into small caps and shit like that. So my cousin and I had a cousin. Uh, we'll call him Fendi, and he is kind of like me. He's very I would say progressive. Anything that pops into our head, we look it up. So I had no idea that the whole time, 2017, 18, 19, transitioning from stocks to crypto, that my cousin, he's getting into crypto as well. And I had no idea. So I guess one of his friends bought Ethereum. I want to say sub $400, maybe like $300 or
Nice.
something way back then. Yeah, pretty young dude. Um,
I
I think he
remember I
put
was
his
buying that
entire.
for 100 Ethereum.
Oh yeah.
It was one of my best
Oh man.
investments, dude.
Oh man. The times when I was buying nonsense with Bitcoin, like I just look and I'm like, damn, like that's crazy. I could have been in it. But my like I was gonna say, my cousin, he bought a decent bag of it. Not as much as he wanted to, but a decent bag of it. And he told me, one day we're hanging out, and he's like, "Yo, bro, I've been buying, crypto. I've been buying this thing, this Ethereum token coin thing." And I'm like, "Really? You know about that? You know about that?" And he's like, "Yeah, bro. Look, check it out. I got." So I'm looking at it, and then we're sitting there, and this my aha moment was we're sitting there and we're kind of like, just going through the Bitcoin chart, going through Ethereum chart. We're kind of just lining it up, seeing the all-time chart, seeing where the all-time low was and the dip and the high, and we're noticing the kind of correlation, like cycles. We're like, hey, whoa, this thing kind of spiked up at this point, and we're so then something I don't know what it was, something about that just didn't sit right with me. Like I didn't understand something about this. Like there was something else to this. I think that was my moment where I was like, "Yo, there's something else to this that I'm missing. I'm not understanding how these assets could be going for so much, and yet so little people know about them." It didn't make sense to me. I said, "Yo, there's something I'm missing." So I had to take a step back, and I remember I had like $5,000. That was all I had. That was all I had, like free to spend at the time. And my cousin, he had around similar chunk of change, and he was like, "Yo, I'm gonna go all in. I'm gonna go all in right now. Like I'm just gonna buy this shit. Whatever happens, we're just gonna figure it out. We're just gonna figure it out. We're gonna sell later date." Now my cousin, he wasn't as technical as me. Once I fell in love with it, I got way more technical. You know,
Yeah.
I started studying it and doing all this stuff, and I couldn't tell him that was a bad idea. That's what scared me. You know what I mean? Like once the more serious I got, the value proposition of Ethereum just grew. It just grew. Here goes my cousin. He sees just the price. He's just looking at the price. And then
Okay.
it dawned on me. It dawned on me. I said, there are millions of people who are just like my cousin, you
Yep.
know, or not technical at all. But they see this price. There was an emotional reaction that triggered in him to say, yo, I'm putting my entire life savings right now on this thing that we don't even know the front and back into. You know what I mean?
Mhm.
What is that makes us do that?
Money.
That FOMO, that fear of missing out is real. You know what
Yeah.
I mean? All these,
Money.
and you know it's funny too. All yeah, money. All these terms that we use, they're really psychological. They're terms to express psychological phenomena that we experience, human beings. You know, even the bear market. It's like okay, a bear market. I feel like even that is objective. Like a bear market for who? If somebody else has more capital than you, if somebody else has like a $1 billion and they're
Sitting on the
playing with a
side.
couple million sitting on the sideline,
Yeah.
and they're buying the entire time. Meanwhile, you're the average Joe Schmo, you
That's
know,
that went all in at the close to the top.
that went all in at a local top. You know
Yeah.
what I mean? It's like
That's
who's
that's the thing. Bear markets are what makes the millionaires and billionaires. You know what I mean? Like if you
exactly,
have capital,
exactly.
yeah, if you have capital on the side, if you took profits on the way up, that's what you're supposed to do is take profits on the way up and not be so damn greedy,
Ah, that's a
because
gem right there. That's another
yeah,
one. It's flying. It's flying.
then because then you got cash on the side, then you can just rinse and repeat. You know what I mean?
Right,
You don't need
right,
to get out at the very top. I try to get 20% from the top, and then I have my moon bag, you know what I mean, that I'll try to call the top with, but
right.
80% of my capital is out before we get to the top. It's worked very well for me, very well, because
Yes,
that
sir.
top, that last 10%, 15% is up and down. You know what I mean? Like it's hard. And
But let me ask you something. Let me ask you something real quick. That same FOMO we were talking about, that fear of missing out. What do you call that? What do you call that? What do you call that feeling you get when you don't sell when you're supposed to?
oh,
That
regret?
yeah. Is that what we're gonna call it? Like when you leave
Yeah.
the money on the table, it didn't pull, and then you regret it. Like
Yeah,
oh
that's
shit.
called that's called a tuition of the
Why
market.
didn't I sell November 2021? Why?
Yeah, that's called the tuition of the market. You have to pay your tuition to the market to learn.
Yep.
You know what I mean?
Yep.
Like you have to learn those lessons. You can take classes and read all the books you want, but until you get the experience and get wrecked once or twice, you're really not going to learn nothing. Like I had to
Dude,
ride
write it all down.
yeah, I had to ride it all the way down. Well, I had to do that once before with a stock, and I had to ride it all the way down, and then just accumulate more. And then I did make money in the end because I learned. I learned after one time of doing that. I never did that again. Like crypto, by the time
Right.
I got into crypto, because I have a similar story to you. I started trading. Well, first I was an investor, in the stock market. And then,
Mhm.
I focused all on education. Once I seen a chart, I was in love with it.
Mhm.
As you said, like I was just fascinated by it, and now I'm obsessed. I've been obsessed. I
Yeah.
call it my magnificent obsession. You know, for real.
I'm right
It's
there with you,
like,
bro. I'm right there with you, bro.
yeah, it's like, I started investing. Then I wanted to know everything.
Unexplainable. It's
Exactly.
unexplainable.
If you really are a die-hard trader, investor, whatever, it's unexplainable. You just love it. You're obsessed.
Hey, bro, I'm
And
not the best, man. I'm definitely not. I'm
yeah,
not
but
the.
if you're not, then you're on the right track, dude, because your mindset is on it. You know what I mean? Like your mindset is what makes a magnificent trader, you know?
Appreciate that, man. For
Yeah,
sure.
no,
Coming
for
from you, that
sure.
means a lot, man. Thanks.
So then after that, after I read all the, 20 books on technical analysis, took,
Mm,
5 to 6 classes on it, big classes, paid for them on the internet. You know what I mean?
mm-hmm.
On finance, economics, trading, like the psychology of the markets, technical analysis. I was taking classes on everything. I've probably taken 10 classes to be honest. Uh, and just
Bro, you're
paid
like
for
the
them.
Rain Man, bro.
The Rain Man.
You're the Rain Man, bro. You learned like the super gritty way, like
Yeah, I'm
all
obsessed.
data, straight facts.
I'm obsessed, dude. For
You're
real.
probably you probably use bar candles, bro. Come on,
No,
man.
no, no. I use the Japanese candlesticks and line chart because all my lines and stuff like that are all off of closures. I don't use wicks because wicks are just the extreme sentiment of the market. You know what I'm saying? That's what wicks are.
Mhm.
Closures are what's important to me. That's my opinion. So yeah,
Right,
after
right.
yeah, so after
It's just the highs and the lows of the time frame. So I
exactly.
understand that.
Exactly. It's just
I understand that.
it's the extremism of that certain time frame. You know what I mean?
Hmm.
Um,
For sure.
so yeah, after I, did all that, I started trading Forex because Forex was the easiest. Once you trade crypto,
Ah,
once you trade crypto, stocks and Forex is easy as hell. You
it's
know what I
easy.
mean?
Right, right,
Yeah,
right.
easy
Yeah,
money.
yeah.
It's like a money machine. You know what I mean?
Right,
You just
right,
take
right.
money. You just take money from the market. Because you've been in crypto, you're seasoned. You know what I mean? Stocks and
But there's
Forex
something
ain't
I didn't
shit.
like about the forex thing. I didn't mean to cut you off, but
No,
it's
you're
just
good.
something. I know a few people who are into it. People that used to do it, to people that are into it now, and sometimes I hear they make a lot of money. Sometimes I hear, it's a wash. But the one thing that I didn't like, I don't want to. I'm not gonna say what program, but there was a feature I didn't like, or I'll say I didn't appreciate. And I remember my brother was into it too. And when he was trading, there seemed to be this timer or something that you couldn't sell. You couldn't sell the asset if the timer was still active or something like that. I don't know. I don't know, but it looked pretty wonky to me, and it
Yeah.
seemed like too much luck was involved, like too much. So it was past my threshold that I was able to deal with. So I was like, I'm
Yeah.
just gonna stay away from that. But I do agree with you, bro. For 100%, I started with stocks, got into crypto, and once I learned and got serious dealing with crypto and that volatility, oh, the volatility you deal with in the stock market is peanuts
Yeah.
compared.
For sure.
Yeah, it's almost like being in on a motorcycle, watching somebody walk. It's like that. You know what
Yeah.
I mean? It's kind of like just that perspective. It's almost like night and day. It's like now I'm watching something in slow motion when I watch stocks. It's
Yep.
like I see so much more. Before it seemed so fast. It's crazy.
Exactly. Yeah, once I found crypto, I was like, this is it. I have arrived. You know what I mean? And
Well, what do you think? Well, what do you?
I already had three
Oh,
years experience before I got into
uh-huh.
crypto. So by the time I got into crypto, I already like had a good foundation. So I came into
Mhm.
crypto, hitting the ground running and
Mhm.
got pretty successful pretty quickly. Because once I realized like how you could trade and the volatility, I'm like, man, this is where it's
Sweet.
at. You know what I
It
mean?
can be pretty sweet, bro. I'm not gonna lie. Yeah,
Yeah,
for sure. I
exactly.
definitely learned to appreciate it for sure.
Yeah. What were you gonna say?
I was gonna say, I was gonna ask you, what do you feel about the diminishing returns in regards to big dog Bitcoin? And I guess maybe you can throw Ethereum in there. Like, do you? Because I had somebody ask me this the other day in the channel, um, what I thought about it, about the diminishing returns, and I gave a quick little response about what I felt about Bitcoin dominance and the role that plays and stuff like that. But which I'm curious, what is your opinion on the diminishing returns that we are to expect going forward? I'd say further out, like 5, 10 years or more,
Well,
like with the cycles.
yeah, I mean, I
And
think
do
you
you
could
even subscribe to the 4 year cycle? Like, do you even subscribe to that?
well, I did, and I had this, see, look, I had this cycle mapped out, dude. I mean, mapped out
Hmm.
using Fibonacci of like the entire cycles and time, like basically with Fibonacci and time. I had this cycle mapped out. The first three cycles,
Hmm.
look, the amount of time from the halvening to the previous high was the exact amount, like give or take a week, to the
Hmm.
next low, like in the current cycle, and like then
Hmm.
using Fibonacci, I had it down to where it landed on the same fib level every time. The high did and the low did. And it was crazy. But then you have all this macroeconomic stuff that came into play. It changed everything.
Mhm.
You know what I mean? So
Right, right.
really, I don't go off of this cycle to really like think, the next cycle, I'm going to have two scenarios. I'm going to have the
Mhm.
scenario that brings in the macroeconomics and, just all the variables. And then I'm going to make another case from previous cycles. You know what I mean? So I'm going to have two. So then, as one plays out, the longer and longer it plays out, I'll be able to shift the probabilities in favor of that. You know what I mean? So,
Yeah, I got you.
yeah,
I
so
got
the
you.
4 year cycle, it still could be there, but I don't think we can count on that this time.
I
You
agree.
got to stay nimble right now because I mean this thing could get ugly. It could get very
Yeah.
ugly, but this could also make you a millionaire. And if you're already a millionaire, it can make you a billionaire. You
Hmm.
got to be ready for it. You know what I mean? Like stay on top of the market, stay analyzing the longer term time frames. You know what I mean? To find out where you think this thing's going to bottom. Stop listening to all these dumbass YouTubers. Find the people that have the reputation of being right. That's who you want to follow. You want to follow the people that have the reputation of being right. And like if people watch, my videos, like
Stay away from the YouTubers. Follow the
exactly,
analysts.
exactly. Yeah, except for me. No, but no,
Except
but
for Rain Man. Except for Rain Man.
yeah, but no, I'm just saying if you are going to watch YouTubers, go to their previous videos. See if they were right. You know what I mean? Like on my
Yeah, check
channel,
their resume.
exactly, check the resume. Like,
'Cause you
you
can
know,
tell a lot by how they chart by, you can tell a lot by the analysis. You can tell a lot about the analysis someone is doing based on how they're charting.
exactly.
For sure, for sure.
Yeah, for sure.
And
Um,
I think that's something that people could take from this as well. Next time you want to go watch your favorite YouTuber, you know, just make a note of how they're charting. What time frames are they using? You
yeah,
know, are
and check
they
their older
based on
videos.
check their older videos? You know what I mean? Like it shouldn't be too hard to ascertain whether someone knows exactly what they're talking about,
Yeah.
or I should say, an analyst over a YouTuber, because some YouTubers will just regurgitate. You know?
Oh, yeah, I've seen it. Copy other people's shit. Well, see,
Yeah,
and
I
this
think
is the
that's
thing.
the main difference.
Why I started YouTube was because I was already doing the stuff in the first place. Like basically I just record what I'm doing when I, do my analysis in the mornings. I just record it. Now, that's the only difference. Everything that I'm already doing, I used to do, but just think it
Right.
to myself. So now the only thing that's different is I say it out loud. You know what I mean? And record it.
For sure.
I
Yeah.
don't edit
Yeah.
my videos, and that's the thing. I don't pre-rehearse either. That's why sometimes, you know what I mean, there'll be a slight pause or whatever because I'm thinking. Uh,
Ah,
yeah,
okay.
because that's the first time I'm looking at the charts that day. You know what I mean?
Nice.
So
Nice.
yeah, it's just raw
And honestly, I
analysis.
appreciate that. I do appreciate that. You know why? Because like I said, that goes along with the cherry pick thing I was saying. You can create any bullish or bearish scenario you want. You can pull that from the chart at any given time, and depending on who you are, who's delivering the message, it can come out. It sound a little bit more bearish. It sound a little bit more bullish. Um, so I think that's super 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 important to catch on, or to be cognizant of. Like, is the person you're watching, what type of analysis are they doing? You
And
know, and
go ahead.
what was that good?
No, I was just gonna say, and pay attention. Do they give the bullish and bearish cases? Because you have to have
Hmm.
no bias. You know what I mean? There's
Right.
always a bullish and a bearish case. The probabilities are never 100%. So you could have a
Yep.
70% bullish scenario that most likely will play out. But what about that 30%? just because it's more of a probability doesn't mean it's going to happen. There's still that
Right.
smaller percentage. You know what I mean? So that's why in my videos, I always give the bullish and bearish cases, and I give the levels like, hey, if this happens, then the probabilities are higher that this is going to happen. And then if this happens, the probabilities are even more in favor of this happening in the same way, the other way. You know what I mean?
Dude, that's so true. That's so true. I've had days, trade days where I swear that I've charted it something perfectly in my mind. I'm like, yo, I peeped the trend. You know, I feel like I have a very good view or readout of what direction the price is going, and it's happened a few times, and I'm sure it happens to plenty of other people.
Mm-hmm.
You chart something out, you swear it's perfect, you swear you know the direction, you enter, and then it just goes the other way
Yeah,
for a second, but enough to liquidate you.
exactly. And then it goes the
Enough
way
to
that you
liquidate you.
originally thought.
And then it goes the exact way you charted, and you're like, bro, what is this?
That's why you got to
Are you
widen your
joking?
stop loss.
And risk management.
Yeah,
Risk management,
very
risk
important.
management. I gotta say it one more time. Risk management.
Yeah.
You know, I've I've gone so far because I would say I have just a little bit more time than the average person to drive myself crazy with charts. But you know, I will document each trade and
That is
how I
very
did it,
important. A trading journal.
and even the mood I was in, even the mood that
Exactly.
day. I
Exactly.
will I will I will keep a journal of what's happened with Bitcoin throughout the day, maybe at three different times. So I'll have about three different entries, and then if I trade that, and that's just documenting, just the market movement and price action. I'll do that three times a day, and then if I trade specifically, I'll document the trade from beginning, from open to close. But when I do that, I'm also documenting how I feel. I'm documenting the thought process of the trade so that when I look back at the three daily entries, I look for some type of confluence maybe so that if I do win big on a trade, I'm like, okay, this formula worked. I mean, this risk management that I used worked for me on this day at this time on this trade. And I just look back. You know what I mean? I'll have like a time or two a month where I'll reflect on the entire month as a whole and see what could be tweaked, what could be changed, the times the trades that I lost or got liquidated on, I should say.
Exactly.
uh what what did I do, you know what I mean,
What worked
to
and what
cause that?
didn't.
What worked and what didn't work? My risk management, was it there, was it not there? Did I miss something? Did I not? Was it my stop loss? Was it my break even? What was it that prevented me from getting the most potential out of this trade? And that's super, super, super crucial. Super crucial. This is like, I like to compare this shit to hunting. You
Mm-hmm.
know, it's like when you're in the field and you're hunting the deer or the elk. You know, I like to think the signs that we get that influence our behavior or our trade behavior or our trades, that price action, that's like the wind. It's like the wind, and the wind
You're
is
as
like the
obsessed
trend.
as I am.
The wind is like the trend, and the trend is your friend. You know what I
Yeah.
mean? It's like you don't
Yeah.
fight against the wind, you don't fight against the trend. You know what I mean? And you got to understand too, the wind can blow in a different direction like that. You know, these what you're seeing on your chart and your candle can change in a matter of a few hours, in a matter of 12 hours, in a matter of 8 hours. Things, the sentiment can change. So you might wake up in the morning and have uh, a certain goal in mind, and that might even affect your bias to where you're hoping for the long to work out or you're hoping for the short to work out, and you're not really looking at any of the factors or macro that could affect that, and you go about your business, you come back to your computer and you're completely wiped, and it didn't matter how many days you were watching it. Sometimes I feel like it has to do with the setup of the trade, because you can set yourself up, you know, better other times than you think you can. It
Hmm.
just takes a lot more thought about your risk management. That actually can do a lot for people. You know, the ounce of prevention, or how I forgot the phrase, but what is it? An ounce of prevention is worth a pound of cure, or something like that. Something like that. It's very easy for people to get caught up in things that don't matter. There's a lot of noise, basically. I'm trying to
Hmm.
say.
Yeah.
You want to minimize the noise as much as possible.
And just look for
Basically,
signal.
signal, right?
Yep.
You wait for confirmation, just like if you're out there hunting in the wild. You know, you hear two clicks from the deer, you know it's there, but you can't just you can't just shoot in the dark. You want to give yourself the greatest probability of winning possible. Put
Yep.
all the odds in your favor. You know, it takes, and sometimes that takes a little bit longer setting yourself up properly. Sometimes you might have to watch Bitcoin before you make a move for a day or two or the week just to see. But you know, it's going to save you a lot of money, and a lot of times, especially with new traders, they get very frustrated very easily. Um, and they get themselves to the point where they just stop after a bad trade, you know? And me personally, I think you're only as good as your last trade. I'm one of
Exactly.
those people.
Yep.
I'm one of those people. You know, maybe call me crazy, but
No, so am I.
yeah, man, I feel like you're only so it would eat me alive just to know that I'm walking away from, you know, the game like that. But
Hmm. Uh,
it's all about your risk management, man, for sure. I can't say that enough.
oh yeah, for sure. Risk management, probabilities, and statistics. I mean, if you
Yep, risk and
focus,
reward.
yeah, if you focus on those, you'll be just fine. I mean, and especially if you're obsessed with the markets as much as we are, you will be just fine. You just focus on that education, focus on, reading those books, taking those classes, build that foundation, and then trade. You know what I mean? Paper trade at first while you're doing that. You know what I mean? Develop skills,
Hmm.
develop technical strategies, which brings me to the next thing I wanted to ask you. I know we've talked a lot about psychology and all that, but what are your technical strategies? Like, what strategies do you use personally to trade? Like, what indicators, what do you do?
Uh, well, if I told you everything, I would have to find you and kill you.
Right.
But nah, no, seriously though, you know, that's why I call you Rain Man, bro, because I feel like the best way to learn is, is to keep it simple. Keep it simple. Learn the tools, learn what they do, why, and you can formulate your own little strategy, your own little, you know, technique with this stuff. You know, it's trial and error, a lot of it, a lot of it. You know, the indicators I use came through a lot of trial and error from doing the wrong things, and that's very important for people who are listening to understand. Is I did a lot of the wrong things the wrong way for a while,
Yeah.
so that to the point where I learned things the correct way, it's just ingrained in me. It's burned. It's etched. It's like that feeling of losing. I never forgot it. So it's like I kind of like everything is with intent, but even subconsciously, I know that I've worked the way I work because of how I learned. You know what I mean? Um, so for me personally, I use a few different indicators. I don't go crazy with it. I do not go crazy with it. Um, Stochastic RSI. Uh, I use MACD. Cumulative volume that gives like the buyers or sales of a in bar form, or no, in I would say in I would say in bar form. Um, BBWP. Uh, that's the Bollinger Bands with percentile.
Mm-hmm.
I love that. I think
Yeah,
I think
me
that is
too.
one of my favorite. That and the VV. If that and the is it VVWP?
VPVR.
Volume profile. Oh
Yep.
man, bro.
Yep.
Volume profile and the BBWP is super deadly, bro.
Oh yeah.
Super deadly.
Because then you
I
know
think
when
I
to
think
trade. You know when to trade with the
it's
BBWP. You don't gotta
and
sit
then
there
with
and watch.
RSI too.
Yep.
Oh yeah, for sure. For sure. That volatility, I kind of, see me the way my brain works is like so I'll give you like a little so I'll have the I MACD BBWP maybe as one, and then the BBWP, I love it because it's the measure of the volatility. It's the Bollinger Band 2.0 basically, just
Yeah.
with a signal line. You can see the squeeze and the expansion of the volatility. Uh, I kind of see it as like it's almost like a trigger pull. It's like that BBWP is once you got the green bars on the MACD, and you got the big green bars, a lot of volume coming in. You know what I mean? And then that BBWP could be crunched. That price action is going to be crunched the same way. It's going to be sideways. You
Mm-hmm.
know. Um. So once you see that expansion in the BBWP, it's just gonna take the price, in whatever direction. If it's a lot of sell volume, it's gonna go that direction. If it's a lot of buy volume, it's gonna be more exaggerated in that direction. Um, that is one of my biggest tools that I refer to, other than the MACD and the RSI, is the BBWP for sure. Highly
Mm-hmm.
recommend. Definitely got that one from you for sure. For sure, I'll give you
Glad
credit
to
for that
help,
one, man.
man.
Yeah, for sure, man. That's definitely one of them. Another one I like is the cumulative volume. It kind of measures the delta. It's gonna give you in candle form. It's almost like the RSI and the MACD put together. If I had to put it like that, I'll use that in conjunction with the BBWP and maybe the money flow index.
Okay.
Sometimes when I don't want to use the RSI, I use the money flow index. Money flow index pretty much just it's basically the RSI, but it's more volume weighted, I would say.
Okay.
You know, right? So that paired the cumulative volume data paired with BBWP and maybe the volume profile,
Yeah.
those help to keep me grounded. The cumulative volume, I love to see. There's a million different ways to do it, but me, I like something that gives me kind of like the overall trend. The overall trend that we're going in, and then it gives you moving averages. I stick with the 21 SMA and the 60 or the 50 EMA. A lot of people don't really use the 60 EMA in general. They pretty much stick with the 50.
Mm-hmm.
The 60, what I've learned about the 60 is actually only about 13% of the top capped coins in the top 100, only about 13% of them are over their 60-day moving average. So, and before it was a lot less than that. It was like maybe like 8%, maybe just like maybe a week or two ago, or maybe like towards the end of July, middle of August, it was like only 8%. That 60-day moving average to me is almost like kind of like the regulator. You know, you'll see the 50 and the 21 bounce off of it, and it kind of gives me, if I see all the moving averages move, especially the 21 move above the 60-day, that kind of gives me a better indication that that the price is serious about this move. You know what I mean? I like to see what moving averages are above or below the 60-day moving average because they all interact with it in a very interesting way. Um, that being said, I am closely watching all the assets that are above their 60. I don't want to shill anything, but that's definitely something to look at. The 60-day moving average, very very interesting. That's another little, you know, I would say little tip. I guess I would give people,
Hmm.
or just to maybe look at that 60-day moving average is super super deadly too. Um, so with me, I take everything on a week by week, day by day basis. For the most part, when I'm trading, like I said, this is like hunting. I'm in the wild. I'm gonna lay on the price action. I'm gonna lay on it. Every day is not a trade day for me. I don't need that. The most successful traders in the world can count on one hand how many trades they execute in a full cycle, in a full year. And that's just a fact. A lot of people who actually are successful and make a lot of money trading, they're not trading 300 days out of the year. It's just
Right.
not what they do. It's just not what they do. So I took that very seriously for my own processes. Um, I I will look at what something does on the weekly close, and then I will look back that previous Friday, see what the price did, and then I'll come to some conclusion about the trend that we're in based on that. Another thing that I use, and I don't, bro, I'm not that dude that, we down here we call it cuffing data. I don't get married to this shit.
Exactly.
I want
Yeah.
everybody to be successful. I want
I
everybody take the bits and pieces they get from me, they get from you, and become better.
yeah.
You
And leave
know?
the rest.
Uh
You know.
the pivot points.
Hmm.
One thing that got me into pivot points was when I was really getting into harmonic pattern trading and quant analysis. I'm a big fan of quant. Um I think it's crazy to me that all this shit that we're analyzing can be simplified in numbers.
Yeah.
Um, I know the nerdiest, smartest people are into that shit, but
Hmm.
it's super, super, super interesting. One thing that I thought was interesting when I was learning about quantitative analysis was that uh, the people behind these indicators. There are people behind these indicators. You know what I mean? They're
Right.
named after actual people. You know what I
They
mean? Like
programmed
Bullinger.
them. They
These are
programmed these
people.
indicators. Right.
They program these in. Even fib retracement levels. There are dudes out there who their mathematical equations like they can be led back to an individual. You know what I mean? And it's just fascinating. Like the mark. It's just everything is very interesting, very crazy to me. But the the time it takes for somebody to find a process that works for them trading, people think it takes longer than it actually does when it
Just
when
backtest.
really it's back to I think that's the word I was looking for, back test. You can back test damn near anything you want. It's everything's there for you to test out and flesh out, and it's just there's just a million different ways to do this. Um, but the pivot points and the VVWP, uh, point of control points, I always thought it was fascinating how price interacted with those levels on the VVWP and you know
VPVR.
VPVR, sorry,
Yeah,
and the support and resistance levels.
I know.
Um, the pivot points, I tried really zoning in, and so by a daily and weekly basis, in the very beginning, I would look for the ultimate support and resistance levels, and I would just watch. Like when I was first learning, if nothing else, if I didn't understand anything else, I would try to find the support and the resistance that the price interacted most from or with. I would just see what happened. Like I would just plot out support and resistance lines and just see what this is before I had any real true technical understanding of what I was really attempting to do. Um, and it's funny, something as simple as the pivot points can be used. They're very powerful because even for a novice to employ with their trading strategy, because like for example, on the weekly closes, that's a Sunday. Um, certain points on a weekly, there are certain weekly pivot points that you could say that, hey, price has a high probability of interacting at this level, at this price. I'm going to monitor and see what it does from here. Is it going to reject or is it going to create a support? You know what I mean? And that's how pretty much it started for me, essentially, getting serious. Um, you know, I sometimes I would figure out a pivot point for the weekly and the daily, and then I would just see, okay, if we're under this or below this, you know, that's gonna give me just one indication of the possible trend we're in. You know what I mean? And the trend is your friend to the end until it beats you on the head.
Right.
But
Hopefully you make five good
yeah,
trades before then, you know?
hope exactly right, exactly.
See, and like we were talking about, strategies and stuff like that. Like you only trade when your signal happens. You know what I mean? Like you don't have to know exactly what the market's going to do. You just trade your plan. Plan your trades, trade your plan. Trade when your signal happens. You know what I mean? Like some months I'll make 5 or 6 trades. Other months I'll make one and just
Mm-hmm.
and it'll last that whole month. My one trade will last that whole month because I'm a swing trader. So I go after like the
Yep.
bigger moves. You know what I mean? I go after
Right.
the bigger moves, lever it up. Not financial advice. You use leverage. You'll get yourself wrecked if you don't know what you're doing. But I lever it up a little bit. I don't even use high leverage. I try to trade bigger position sizes with
Right.
less leverage. You know what I mean? And just trade my own money instead of trading someone else's money. You know what I mean?
Right.
Because you can get wrecked and get liquidated and then lose all your shit. No, no, I'm good on that. But
Right. You definitely something that I just reminded of is that you just reminded me of is another thing I like to do and that I've been employing recently is kind of layering into the trade. If I do think that, I got one, I will layer into it.
yep, me
So
too.
I will use a small amount of capital, you know what I mean? Small
Yep,
leverage. I'll do all my due diligence, enter the trade, and and I don't care how sure I am. I'll monitor my trades, you know, as best I can. But if I see that certain points are being rejected from, depending on the direction I'm going, if it's a long or a short, because it'll change. But I will I'll do that, and I'll it kind of just it gives me a little bit more confidence in the trade when I layer in a little bit at a time. So I'll wait for certain confirmations that, hey, this really is gonna go in the direction I'm planning it will. Okay, I'm gonna add more money. You know, I'll
Yep.
probably add a little bit more and layer into it. You don't have to go all in, and that's another thing. People go in with too much cash, too much leverage. Too much cash, too much leverage. That's a recipe for getting licked. You're gonna get licked out here.
Yeah.
You know, you you don't want that. That's a bad day. So, uh, I recommend that too. Like what you said, lower leverage, less cash initially,
Yeah.
just just to see, you know, is the trade going in the direction that I
I
needed
do the
to?
same thing.
So you're always at risk of getting licked by the stop hunters. Always.
Yep.
Yeah,
For
I
sure.
call them the bandits. I call them the bandits. They're the bandits that come and take your gains.
Stop hunters.
The stop hunters, exactly.
Um, s-
You get in one, you get in a position, and then they take it the other way, liquidate you, and then take it right back where you
See,
thought it was gonna go the whole time.
exactly. And they know, like, they do the math in their head, like these big whales and institutions, they do the math in their head what price points you would have to get it to liquidate a certain amount of leverage. You know what I'm
All
saying?
comes
Like if
down to
somebody
numbers,
has,
man. All comes down.
yeah, if somebody has 10x leverage, they know what price they got to get to liquidate all the people with
Liquidate,
10x
right?
leverage. Especially these exchanges, man. This is how like one of the ways they make money is by liquidating people. You know what I mean? And they're
Yep.
whales.
Both ways.
You
Both
got to
ways.
think of the exchanges as whales because they trade the
Mhm.
markets as well. You know what I'm saying? And they know how many people have positions and whether they're long or short, how much leverage. They know all that. It's literally
Mhm.
like it's literally like they know exactly what could happen. You know what I'm saying? But they trade differently. Like they can't just buy and sell and that's it. Like they have to layer in.
Right.
Sometimes they have
Right.
to raise the price just to sell. You know what I'm saying? It's different. You need to understand the psychology of the whales and the exchanges, and then you need to understand the psychology of retail, and then you need to understand the psychology of professional retail. You know what I'm saying? Like,
Mhm.
'cause there's basically three different kinds of traders, you know? And yeah, you have to stay on. You have to know what scenarios could happen, and if you are using leverage, figure out what your price point would have to be and don't put your stop where everyone is putting their stops. If a place seems really obvious to put a stop, like you're like, okay,
Right.
well if it breaks
Right.
this level, it's going to make a lower low and then it's going to go down. No, you place your stops away from where you originally wanted to, unless you really really know what you're doing and that's something you already do. But like if you're going to plan a stop, I would put it a little farther away just because
Right.
other people are putting their stops right there because it's so damn obvious. You know what I mean? Uh,
Yeah. I don't
what
think people
are
realize that. Like, you can do that. You cannot make it as obvious. Like,
right?
it's
Exactly. Just like hunting. You know what I mean? Don't make it so obvious. You know what
like
I
these little
mean?
minions. They're like these little minions in the background that.
Yeah. Just screwing your game up. So
Yeah, man. I swear.
what are some of, all traders have rules. You know what I mean? Like
Right.
I don't need you to share all of them, but like pick like three, you know what I mean? Like what are some of your best rules, that you strictly live by when you trade?
Just off the table, cause I yell at my brother all the time about shit like this, cause he's getting into it. So I'm the one that's kind of like I'm his OG in a sense
Yeah.
with this. So these are things that I they're very easy for me to tell you right now because I just tell him all the time. One thing for sure is do your diligence. That's one, and everything that and comes with that. Do your diligence. Do the homework. What's going on with this company? What's going on around it? Uh, why is the trade you're making right now relevant to the trend? You know, like that's one. Two, take money off the table. Always take your money off the table. Stop leaving money on the table. Somebody needs to hear this because I'm sure there's people who will get in on trades, will be up 60%, 70%, 80%, 100%. Oh, great, wow, great. And they're just, it's like almost like they're in love with just seeing the number on the screen and they just can't pull the trigger and take the money. I don't know. It's like you said, it's a regret. Like, I don't know what it is, but some people, that's one of their only problems. They just don't know when to sell. They just don't know when to take their money. That's a thing too. You know what I mean? So, I think what can help with that is understanding your risk reward in the first place. Because some people are making trades and they're making trades without uh understanding that at all. Like, okay, I'm making this trade and I'm risking the risk is outweighing the reward on this trade based on how much money I'm using, the price it's at, the data, um, and they're just doing anything. Some people don't realize that certain trades are statistically more probable to work out in your favor than others. You know, you can you don't have to blindly just trade shorts and longs based on support and resistance levels and that's it, or just volume and that's it, and just hope for the best because it never works out that way. Because you can plot something perfectly like I said, and then the price will go the other way just enough for you to get liquidated. You know what I mean? So I would say take your do your due diligence, take your money off the table, know when to sell. Know when to sell. It's very important. You could have the best trade ever and just sell at the wrong time. You know what I mean? Get buying, entering. You could sell at the wrong time. You know what I mean? You could completely miss your opportunity to sell for the day or for the hour or whatever the case may be, whatever time frame you're really zoning in on. Another thing too, when it comes to futures and utilizing leverage, a little tidbit that I like to kind of never try to forget is the more leverage I'm attempting to use on this trade, the smaller window I have for this trade to be open. Me personally, the more leverage I'm using, I try to shorten the window that I'm in the trade, unless like it's just like a sure shot and just like I don't know, like it couldn't be any clearer if God told you to do it. Like, but the market's not like that. It's never like that. It never seems 100% sure one way, 100% sure the other way because these things change like that. But if you're gonna use the more leverage you use, you don't wanna dick around and keep that thing open. And listen, in crypto are not correlated. Okay, so that's a little thing I like to tell people around me. Art and stocks aren't correlated. Art and crypto are not correlated. You don't want to sit here and admire the beauty of the price action too long. Sometimes you can do that too long. You know what I mean? Sometimes you can be in a position too long.
Yeah.
You don't realize. Um. So yeah, those are some quick things I can think of. Like Oh, another thing too, where you're getting your information from is important. Not because it might be incorrect or correct, but because it's affecting you emotionally. And what can affect you emotionally can affect how you trade. You know, this is a very ruthless game people are getting
Hmm.
themselves into trading,
Oh yeah.
especially with leverage. You know what I mean? It's very ruthless. It doesn't have any emotions. It doesn't care that this is your life savings. It
Right.
doesn't care where you got the money from or where it came from. All it knows is that
It
it's gonna
wants it.
get you.
Yeah.
It wants it. It's looking. It's hunting for that liquidity at all times. At all times. I don't like to play the middle of things. I like to, if I'm gonna short something, I want to get in at the highest of the time frame I can get in at. If I want to long something, I want to get in at the bounce. You know that I don't really like to play that middle game because in that middle game you get washed. That's just my opinion. You can easily put yourself in the middle with some of these trades and get liquidated by the stop hunters because you entered in maybe prematurely or maybe too late. You know what I mean? Late shorts, late longs, things like that. It happens, and
Hmm.
these are the things that I write down in my black book because I want to know how the market behaved on certain days, certain times of the year. I'll even put what's going on around that month. Like if we had an FOMC Jackson Hole, whatever, I'll put that in there. I'll just put that in the corner in a bubble. Like these are the events that happened this month, this week. What was going on around this trade that I did? All of that is very super 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 important because when you can look back and see like, okay, because some of these events happen annually. These are things that are occurring, like the Bitcoin conference. That's every year. These FOMC, that's every year. Some of these things are happen on a yearly basis, and a lot of the times, a lot of the same reactions are gotten from retail on these events, on these days. Sometimes, and you would know that if you were focusing not just on price action, but the macro and everything around it and
And
everything that can affect the price action.
and treating it as a job. You know what I'm saying? Like you
Right.
said, like keeping that trading journal, like people think trading is just as simple as like buying and selling. Like no, there's a lot of work that goes into it. You know what I mean?
Yeah,
Like recording
for sure.
recording your own psychology, how you felt, like recording the market data, what you seen. And like you said, events, all that stuff. Like you need to record all this stuff and pay attention to it. Like I got a huge whiteboard right behind me. And then like as you see on this side, those are all charts that I've drawn out that are, altcoin cycles,
Yeah.
sentiment cycles, market cycles, all different kinds of, stuff. Some of it's economics, you know what I mean? And like I keep that stuff, it's all around my whiteboard. And my whiteboard is all kinds of shit. And it all has to do with the market, you know what I mean? And I look at that every single day and, figure out where I am in the market. You want to know where you are on short-term time
Right.
frame, on medium-term time frame, and on long-term time frame. You want to know where you are in the market and then place your trades accordingly. You know what I'm saying? Uh,
Right. Right. Right.
yeah, I really enjoyed this conversation, man. I really
Yeah, for
appreciate
sure,
you
bro.
coming on. Yeah, so
Yeah.
do you have any closing thoughts for the audience?
Uh, anything closing? Stay nimble. That's number one. Uh, also too, I would just tell people, don't beat yourself up for not getting the results that you you plan for or you're anticipating. Um, like I said, the market is emotionless. It's ruthless. It does things that sometimes we can't quantify. All we can do is try to put the odds as best in our favor as possible. Um, don't ever let that deter you from, continuing to want to learn. Don't ever let a bad trade discourage you from wanting to learn, because that will to learn is your greatest currency at the end of the day.
Exactly.
For sure.
Exactly.
For sure.
Yeah, once again, I would like to thank you for coming on. I am sure people got a lot of value out of this. I know I did. I got a lot of value out of this. Just having this conversation with you, knowing that there's people out there that are just as obsessed as I am, so then I don't feel so damn weird, you know?
You're
And
not alone, bro. You're not alone,
right,
bro.
right. So if you guys like this video, like and subscribe to the channel to get more content like this. We interview your favorite YouTubers, top crypto professionals, and market experts. We also do daily analysis every single day. We have morning analysis. I tell you my thoughts on the market. We just basically do my analysis together. You know what I'm saying? And also join the Discord. A lot of good conversation about crypto markets, investing, economics, NFTs, metaverse, all that stuff. Anything crypto and market related, we talk about it. And sometimes we talk about the moves before I can even get the videos out. So definitely join the Discord. And yeah, everyone have a great morning, great afternoon, great evening. And I will see you tomorrow.